Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You are watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me on the show is Shail Bhatnagar. And the final month of 2023 is here and the Nifty has recovered most of the losses since the peaking out in mid-September. Now the previous high of 20,222 is just 90 points away from the Nifty's current level. Will the strong GDP print we saw yesterday and the exit polls outcome push Nifty towards record high levels today is something that we will tell you in the trading session that is about to follow. But first up, the top headlines we're tracking for you this hour. Indian stocks are likely to react positively on Friday to exit poll results, which predict a better than expected performance by the ruling central party BJP. The party is likely to retain power in Madhya Pradesh and have a decent shot at power in Rajasthan. Markets are likely to hit fresh highs as strong GDP data as well as a surge in positivity in overseas cues and a strong local buying could follow. Traders will focus their energies on relatively inexpensive PSU stocks, especially in the insurance, energy, railways and the banking space. Very good morning to all our viewers and good morning to you, Shail, as well. Shail, like you were pointing out yesterday, it's been a fantastic November series and now we have the September quarter GDP numbers that have surpassed expectations. The state exit polls also projecting closer than expected finish on the coming Sunday. How do you expect the Nifty to go forward?
Good morning, Sakshi, and a very, very warm welcome to this wonderful beginning on 1st of December. On Market Today. Thousands of viewers are joining us on a regular basis to benefit from fantastic options calls, fantastic stock picking, and of course this roaring bull market. So Sakshi, let's look at the positives first and then the practicalities next. The positives: a 500-point rally on the Dow Jones Index.
Yeah.
Second, the BJP's performance in the election results that are going to be declared over the weekend is better than expected. So Madhya Pradesh is likely to be retained and there is a very, very decent chance that the central party might come back into power in Rajasthan, which means displace the present incumbent there. So these are the second positive. Third, GDP is roaring. Scorching pace in the second quarter, 7.6% GDP growth coming in July and September versus 6.2 year ago. Except for agriculture, all other sectors, mining, electricity, hotels, everything is booming. So these are the three positives. And the fact that the GIFT Nifty is pointing to a record high. So all put together, we are most likely to scale 20,222. Now, Sakshi, comes the practicalities. All of this is priced into the market. We've seen the Nifty rally 6.1% in November. We've seen the mid-cap index rally 11.2% in November. Bank index, which is an underperformer, is up 4.8%. And we have record highs on autos, record high on FMCG, record high on the energy index, record high on realty space. So everything is fully baked. My simple understanding is when the going is good, one must book at least partial, if not 50% profit in all trading positions where you have made supernormal money. So 20,222 is definitely on the cards, which is a record high. But beyond this, the markets are likely to pause because they've run up so sharply and every single point of good news is baked. Now, if you look at the Nifty options chain, a very, very strong support, Sakshi, is now getting built up in the December 6th weekly expiry on the 20,000 put. Very, very strong. So 20,000 is not going anywhere. Now the fact is, where is it headed? So at the moment, indications that 20,300 looks good, 20,250 looks good. So that is on the cards, and beyond that, my own understanding is that the market will consolidate. That is the view on the Nifty and the broader market, Sakshi. When the going is good, book some profit. Profit in the bank is better than profit in the book.
Absolutely, and very well said. Let's talk about the Nifty Bank, the larger underperformer when you compare it with the Nifty. But we did see that the outperformance of Bank Nifty was seen in the previous 4 sessions, which ensured that the index ended November with gains of nearly 4%, like you pointed out. The month turned out to be the best since April for the banking index as well. Sustaining at higher levels will be now key for Nifty Bank if the Nifty also has to scale to new peaks. What should one really be doing as far as the Nifty Bank is concerned, Shail, now?
Okay, Sakshi, 4.8% is where the November gains rest on the Bank Nifty, and you're looking at mid-October highs, 44,480 in front of you, flat close yesterday. So that is there, and the fact that we are more or less above 20 DMA on the index. So it's a quiet move on the Bank Nifty. It's still, a million miles away from its record high, which was 46,234. So, about 1800 points below. This one is going to take some time to breathe, and let's leave it there. A very, 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 very strong support coming in at 44,500 for Bank Nifty bulls. Let's see whether that support holds or not. And this is how markets are positioned on the Nifty and the Bank Nifty. There are many, many transactions, Sakshi, that are happening. Phenomenal listing of Tata Technologies, phenomenal listing of Ireda. Flair is going to list today. You have a transaction on Ultratech Cement, which is absorbing the cement unit of Kesoram. There is so much of good news I can't believe, and therefore, I feel a little jittery that, हो गया, अभी थोड़ा पैसा घर लेके जाते हैं और फिर 4th December, 15th December के आसपास देखेंगे. Sakshi.
Right. From the F&O space, what are the cues for the new monthly series now, Shail? Any particular stocks that you have your eyes on?
Sakshi, there is a host of stocks. We'll focus on the auto stocks today. November details on volume sales and monthly sales will be visible. My own understanding is that we still have a run-up left in Hero Motors, as also the two companies that come up with products which are aspirational, TVS Motors and Eicher Motors. So auto stocks are what I'm looking at in the sequence of importance. Hero Motors, because it is an underperformer, a relative underperformer, if I may add, compared with Bajaj Auto, compared with TVS, compared with Eicher. And of course, within that space, Mahindra and Mahindra, the numbers are likely to be outstanding. So M&M and Hero Motors on the long side. Sakshi.
Fair enough. Let's also look at the global cues and the handover that we've got from the Wall Street. Remember, it was a mixed performance on the last day of November from the Wall Street indices. However, the Dow Jones reached new highs for the year overnight. It also had the best month since October of 2022. We did see the S&P 500 also gaining about 0.4% in trade, while the Nasdaq slipped after the inflation data. However, S&P 500 reported one of the best November gains in a century, and it's now just about 5% away from its all-time high levels as well, and that's as far as the US indices are concerned. So 1.5% higher for the Dow Jones in overnight trading session. S&P 500 up 4%, up 0.4%, but Nasdaq slightly slipping in trade. The Asian equities opened lower ahead of the private factory activity surveys from across the region, and then we're looking at a mixed trading action in the early trades. Right now, you can see a slight dip coming in on the Nikkei, 0.09% of a fall. The Kospi is the one that's taking a beating, 0.9% of a fall in the early trade, 0.5% of a fall for the Hang Seng, and the Shanghai is also down by 0.3% as well. As far as the GIFT Nifty indications are concerned, they actually indicate at a positive opening for the Sensex and the Nifty, and the start could be positive. Let's also look at the flows as well. Foreign investors were net buyers in the cash market on Thursday, buying about 8,148 odd crore rupees worth of stocks. But remember, this number has been skewed due to the $1 billion plus MSCI inflows that was seen in the final minutes of the trading session as well. When we talk about the domestic institutions, they were net sellers during the monthly expiry session to the tune of 780 odd crore rupees as well. Shail, FII flows, they're finally trying to start to buy into the Indian markets at this point in time, where the markets are reaching all-time high levels again. Do you expect the momentum to sustain going forward?
Sakshi, I think we need to read a bit deeper into this 8,000 crore number that has come in from FIIs. Of course, this is hugely positive, but this is mostly MSCI rejig. My understanding is that, you've seen a blowout on the Dow Jones index yesterday. And as you rightly mentioned, on the S&P 500 at least, this was the second best month, up 5.8% in its history. So my understanding is कि वहाँ पर थोड़ा profit book होगा और वो पैसा emerging markets में आएगा, because the US 10-year yield is now fairly quiet. So the trend in December is likely to be positive. I am not sure about the quantum, but they are the ones who will buy from us, no? The guys who've so diligently bought in from April to October, November. The hard work that ultra HNIs have done, the hard work that funds have done via SIPs. Where is that liquidity going to be absorbed? These are the potential purchases that foreign institutional investors will do from smart investors in India. Sakshi, gone are the days when FIIs used to decide on the trend. Now they are trend followers. Please try and understand, given the change that has happened in the dramatic shift in Indian markets, it's only a matter of time when, as we follow the Dow, the US traders will follow the Nifty. This time is coming. Take it from me.
Okay, let's look at some stocks then which you need to keep on your radar when the markets open. Ultratech Cement, like Shail pointed out, that company is going to be in focus. Of course, yesterday also we saw that 9,000 mark on Ultratech Cement. The company has now announced the acquisition of Kesoram Cement unit, and Kesoram will demerge its cement business into Ultratech, who will then issue 1 share for every 52 shares of Kesoram, and the deal values Kesoram at 173 rupees per share, a premium to Thursday's closing price of 139 rupees as well. And the deal will be also at the enterprise valuation of 7,500 crore rupees. So keep an eye out on both Ultratech and Kesoram. Let's look at the defense stocks that will again be in focus. Defense Acquisition Council has approved the acquisition worth about 2.2 lakh crore rupees to enhance the capabilities of the armed forces. 98% of those will also be sourced from domestic industries as well. So that's going to be in focus. So stocks like HAL will be in focus, and all the defense-backed stocks will be in focus today. Whirlpool is going to be in focus. The parent has now thought to sell up about 24% of the ownership interest in India unit in 2024. Whirlpool Corporation currently has 75% stake in the India unit, and the parent now intends to retain a majority interest post the completion of the transaction and to use the proceeds to reduce the debt levels as well. So that also is a positive update. Now, ITD Cementation, another stock that you need to keep in your radar. It has got new orders worth 1,000 odd crore rupees in Andhra Pradesh. CSB Bank, here the RBI has approved the dilution of stake shareholding of promoter FIH Mauritius Investments Limited as well. So that's another stock that you need to keep on your radar in today's trading action. These are the top stocks that you need to keep on your focus list. Shail.
Right. Sakshi, just the right time to welcome our friend Mayuresh Joshi, Head of Equity Research at William O'Neill, India. A very, very warm hello to you, Mayuresh. What a day to have you. A fabulous, fabulous November draws to a close. and an equally wonderful December begins. Scorching GDP, a 500-point rally on the Dow Jones Index, fabulous listing of Tata Technologies and Irida. इससे ज़्यादा और क्या अच्छे दिन चाहिए आपको?
Morning, Shail sir. Morning, Sakshi. Oh, absolutely. I think the markets, as we say, are firing on all cylinders. And I think good news and good prices are all coming together. So I think it's exactly the opposite at periodicities of time. But yeah, I think the optimism for markets continue. And markets probably seem to be in a good space, both from global cues as well as all the domestic cues that we are receiving. So yeah, the march upwards and northwards probably continues for us.
Okay, now tell us a couple of stocks which you find attractive at current levels, Mayuresh Bhai. What is your research telling you?
So, Shail sir, I think I'll continue with one of the calls that I gave last week because as a space, our belief is auto ancillaries can continue doing well. And within this space, battery makers are in a very sweet spot, in our opinion. So both the players are looking good, but what we have selected at Markets with India is Exide Limited. Two things. One, I think the OEM market is seemingly looking very, very good, both in terms of the existing models on the internal combustion engines, as well as the expectations in terms of the shift towards the electrical vehicle mobility platforms. In that regards, the capacity setting up in lithium-ion batteries for an Exide 6 gigawatt hours expected to come up over the next few quarters, all through internal approvals. So a capex of 600 crores will be laid out. No additional debt, which means that the balance sheet remains strong from cash flow generation, which will come through. The second aspect is the replacement market and the industrial part of the market where Exide provides batteries, which accounts for almost 30% of the top line. Here, I think the continuance in terms of better volume growth expected to continue. And as that transition happens from the internal combustion engines to electrical mobility, both batteries as well as the expectations in terms of servicing these as well, I think Exide will probably remain on top. Lead prices have come up, which means margins should remain extremely stable. I think Exide remains one of our picks at Markets with India. The other one that we probably like is Bikaji Foods as well. Two things. One, I think if you probably look at the entire construct of the namkeen and the Indian ethnic snacks market, expected to grow quite significantly. You've seen numbers from Haldiram, which have clocked around 9,800 crores in the last year, in the year gone by. PepsiCo's snacking products have done almost 6,000 crores, and so has a lot of the regional players. This stands out in terms of two factors. One, I think the volume and the capacity additions that Bikaji has done, specifically on its namkeen and the ethnic snacks portfolio, will be extremely important in terms of the double-digit volume growth that it can probably deliver. We've seen a very strong margin performance and the expectations in terms of cost optimization, along with a lot of leverage playing out, because a lot of input costs have moderated to a large extent, including edible oil, including flour prices. And the best in terms of the festive season Q3, which will reflect Diwali as well as the Christmas vacations. I think a lot more will get reflected in this quarter and the second half as well. Balance sheet remains reasonably sound, and the expectations in terms of reasonable ROEs to expand as we look at Markets with India at around 17.5% over the next couple of years probably seems to be a huge possibility. So I think both these stories, we probably believe there is a good 20 to 25% upside that can be delivered even from the country.
Fair. Very good morning to you, Mr. Joshi. And tell us, as far as the auto stocks are concerned, they'll be in focus because of the numbers coming out today, the sales figures for the month. Tell us, where are you keeping your focus? After a long haul, we are seeing finally that the two-wheeler stocks have started to perform. Eicher continues to be one of the top ones, moving at record high levels again. We also have a slew of brokerage houses reports that have come out today on the two-wheeler stocks. For Eicher Motors, Goldman Sachs has a buy with a target price of 41.50. Tata Motors is on a buy list for them at 760 odd rupees. Then we also have Hero Moto that they have maintained a sell here with a target price of 2880. And TVS Motors, they've maintained a neutral with a price of 1800 odd or so. For M&M, they have a buy with a target price of 1790. But where would you tilt your focus as far as your own focus is concerned? Two-wheelers, four-wheelers, and where would you see better promise?
Morning, Sakshi. So I think the better promise is in auto ancillaries, but within the space, I think the kind of moves that we have probably seen and the expectations in terms of volume growth remaining extremely strong and stable, both for two-wheelers and the passenger vehicle pack, probably continues over the next few quarters. You've seen good footfalls over the last few quarters, good footfalls in this quarter as well. The order backlog has been pretty reasonable for both these players with new launches that they've respectively done within their own spaces. Input cost moderation to a certain extent, but you've seen in the recent past steel prices have gone up. So Maruti did take a hike in terms of a few models for this quarter itself. And therefore, I think this pack probably looks very well placed as far as earnings is expected to continue. And again, I think this entire transition towards EV will play out very, very positively. Valuations might be the only concern specifically for the two-wheelers. Whether it's TVS, whether it's Bajaj Auto, I think way above its standard deviation averages over the past 5 years. But I think earnings are probably supporting the kind of higher premium multiples that you've got. So anybody holding on to a stock like TVS or a Bajaj Auto should continue. Within the PV, my own sense is that Maruti might give a good earnings momentum in the next year. And therefore Maruti.
Fair. All right, fair enough. The other space I wanted to draw your attention is again the one which has a lot of news flows, the cement pack. How do you view this news of Ultratech Kesoram and what does it do to the entire focus on the cement space, your particular favorite stocks from this basket?
Very positive. I think the entire space is expected to do well. The Ultratech acquisition for Kesoram obviously is skewed in favor of Kesoram as far as pricing is concerned. The enterprise value for the deal pegs Kesoram's enterprise value around 7,500 crores, which probably means that the price at 139, the expected price should be around 170, 175 odd rupees, looking at the deal construct. For Ultratech, obviously, I think what they've probably got is 10.7 MTPA, 8.5 is completely integrated. But this complete acquisition has come at a cost of $85. And the replacement cost, which is lesser than $90, is quite significant in its target achievement of almost 200 MTPA that it has to do, or it is able to achieve along with the organic and the inorganic growth that they're probably doing out with. So consolidation is happening in this industry, Sakshi, very, very frankly. A lot of infra growth, infra work is expected to continue over the next few years, whether it's housing, whether it's roads, whether it's dams, whether it's ports. And therefore, cement players with a large national presence like Ultratech, leaders in the space, can continue doing well. Within the mid caps, obviously stocks like JK Cement, very good set of numbers in the quarter gone by. Expectations of white cement and grey cement realizations, along with the product mix that they probably have, and the leverage that they will probably carry on their balance sheet, also probably looks like a very, very attractive bet from the mid cap space.
Okay, what we'll do, Mayuresh, is we'll take a very, very quick break right here. When we return, a lot of stocks and sectors discussion will follow suit. So all the viewers, stay with us on Business Today TV.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-risking the Future in collaboration with Business Today. In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-risking the Future in collaboration with Business Today.
Welcome back to Market Today. Before we look at pre-open trades and look forward to an exciting day ahead in the secondary markets, Mayuresh, your thoughts on the fabulous listing of Tata Technologies and IREDA. Are these stocks overpriced at current levels?
Two ways about it, Shail sir. So I think where IREDA was expected to list and where it is placed right now, almost 1.8, 1.9 times, almost 2 times, if I'm not mistaken, price to book, which is far higher than what PFC and REC is doing. Yes, structurally, I think a lot of triggers. We are looking at targets of 500 gigawatts till 2030, as far as the renewable energy goals are concerned. But somewhere, I think the expectations in terms of loan growth at 30%, what they've done, the mix between private government at 70-30, the expectations of NIM expansion from 3.75, asset quality pressures coming down, all that is probably getting gestated in the price as we speak. So I think investors who are lucky enough to have got the allotments can ride the momentum. For Tata Tech as well, I think look at the listing gains. I think beyond anybody's imagination at this point of time. And even if there is a substantial correction, even from the current levels, 30%, 40%, still investors are making so much money at their IPO price that it's very well advised that they can probably hold on. But look out for triggers for both these stocks on how quarterly numbers are probably moving. And for fresh investors, obviously, you need to wait for good declines happening onto this stock. By good, I mean it has to be a substantial one. What we do at MarketSmith is we look at an IPO base. So if that probably gets constructed over the next 3 or 4 weeks, maybe you've got something that if the stock gives you that amount of correction, something on your hands that you can grab. But both the stories are structurally looking very positive over a longer time.
Okay, we'll in a very short while welcome Mr. Hemen Kapadia, Senior Vice President at Institutional Equity Research with KR Choksi Securities, and also look at pre-open trades. There they are in front of you. Ladies and gentlemen, we have a fresh record high on the Nifty as far as initial trades are concerned, 20,240, and wow. This is a 106-point gap up. Let's see how this pans out. Mayuresh, I've always maintained you are our lucky mascot and you should come on a daily basis. With that in mind, let's look at the markets. It's a blowout on Tata Motors, Tata TCS. Remember, the buyback starts today, 2% higher, 35.48. Let's look at index heavyweights. HDFC Bank, 1568, 0.6% higher. Infosys, 0.5% higher, 1463. And we have Reliance, 0.3% higher, 2386. Sakshi, the good news is, apart from Axis Bank, all 9 index heavyweights are in the green. Tata Motors 1.2% higher, 715. Let's look at the NSE 500, NSE FNO, and look at stocks that are on the gaining list apart from the index heavyweights. Hindustan Aeronautics, 5% higher, 2498. Remember, the government of India cleared defense proposals amounting to 2,23,000 crore rupees to buy 97 Tejas aircraft, 150 attack helicopters, and loads of missiles. ACC, 3% higher, 1934. I want to see what DLF is doing, 1.75% higher, 636. Let's shift focus to NSE 500 and look at the top gainers. Okay, ladies and gentlemen, we have NIACL again running away, 3.6% higher, 264.40. Massive move happening on public sector insurers. We have City Union Bank 149, 1.8% higher. I'm just talking about high beta at the moment. Escorts 1.5% higher, 3198. Let's shift focus on NSE 500. Okay, the top gainers, Sakshi, as I had pointed out, Aisha Motors 2% higher, 3978. Hero Motors 2.2% higher, 3900. L&T Mindtree 5620, 1.5% higher. Top losers, barely a loss on ONGC. Axis Bank 0.5% lower. Cipla flat, Maruti flat. It's going to be a record high in the markets today, Sakshi. Thank God it's Friday as well, and it's the beginning of the first session of December. I think Mr. Kapadia would have joined us. Let me just check. अच्छा चलिए मयूरेश जी से बात करते हैं. मयूरेश, 20,217 for you, a record high is a given. Now what would you do? Book some profit or go aggressively long in the market?
I think, first of all, congratulations to the entire team at Business Today. You, Sakshi, and everybody who's watching this right now. I think the retail investors, first of all, Shail sir, have kept faith in the market, and that is what is creating such optimism. Having said that, at all-time highs, always this question pops up: is the market overheated? Are we probably in a phase where you should probably book out of your portfolio, so on and so forth? But I think the Indian structural story has just begun. What the markets have probably delivered over the past 1 year is hardly anything. The broader markets might have done a lot more, but the main index has hardly done anything. A lot of stocks, even in the main indices, Shail sir, stock like ICICI Bank as an example, over 1 year's time chart have done nothing in terms of returns. So there is ample expectations in terms of how earnings delivery will be. The India story is not just for a year or a couple of years. It's going to exist for the next few decades. And as we are seeing ourselves transpiring to a huge manufacturing hub, manufacturing as a space, software as a space will continue doing well, and so many themes around that. So don't see any huge structural downside for the markets. China is still expected to continue performing badly. A lot of the developed markets are still grappling with a lot of macro issues. And we are very, very safe and secure when a lot of these aspects considered. At some point, profit booking will come into the market. There will be some elements in terms of falls that we'll probably see. But I think those opportunities should be lapped up to buy quality into the market and hold on. So I think it's all about having patience into the markets over the longer period of time, which will reward investors very handsomely.
Okay, we also have with us Himen Kabadia, Senior Vice President Institutional Equity at KR Choksi Stocks and Securities. Very good morning to you, Himen, and congratulations. Record high levels on the Nifty. We had a gap up opening at 20,208 currently. What would you do on the Nifty?
A very good morning to you. Thank you for having me on the show. And yes, congratulations to you and all the investors in the country. We are sitting on top of a 1,200 point rise. We are getting into all-time highs. We've had multiple gap ups. Okay, exit polls are out, but we have the final results on Monday. I would not chase the gap up. Okay, stock specific, there are a lot of opportunities, no doubt. But I wouldn't like to chase the gap up as far as the Nifty is concerned. The Bank Nifty, yes, has a lot of catching up to do. So that's where one can look at. But Nifty, obviously there's no question of shorting at this level or at this point in time. But I would absolutely not go long if I see the gap up opening like I'm seeing. So I would say stay stock specific instead of chasing the Nifty at the moment.
Okay, Himen, two stocks that you would be buying today?
Okay, two stocks which I like. First one is this Chola investment. I think we've seen a nice upward key reversal coming in yesterday, and volume was highest in the last 14 trading sessions. So one can buy Chola at around 115, stop loss 1108 and target 1129. Once again, if there is a big gap up, do not chase the trade. Second one, which looks once again like a buy is, I'm bullish on the IT pack. I think even from a longer term point of view, the IT index, Nifty IT index has turned positive after almost about 1.5 years of a correction. Info Edge is a stock which looks technically very, I mean, the whole pack looks good, but Info Edge has been down for 7 trading sessions. Now it has given an upward key reversal. So one can buy Info Edge at 4600, stop loss 4550, target 4700.
Okay. Good morning, Mr. Kapadia. What a pleasure to welcome you. And a very bold call on the Nifty, which is not to chase the gap up, and very, very practical too. Within the index, in the Nifty, Mr. Kapadia, what are the charts of auto stocks telling you? We've seen blowout rallies happening on Bajaj Auto, Eicher Motors, and TVS Motors in particular. Are these structural uptrends, or are these just monthly moves which just might get absorbed?
A very good morning to you, Mr. Bhatnagar. Thank you for having me on the show. I would go with what you said. They look like structural up moves. I mean, they have been, and frankly speaking, they've been outperforming. I think one of the earliest indices to post a fresh all-time high was, even if you look at the BSE, NSE, if you look at the Nifty Auto Index, Mr. Bhatnagar, I think it was one of the earliest indices. I think probably Pharma and Auto. Yeah, these were the earliest indices to post fresh all-time highs. And if that is the case, the setup, if you look on the long-term charts, from COVID days of 4,500, the Nifty Auto is at 17,611 and counting. No particular overbought situation or no negative divergence, no weakness. So yes, Bajaj Auto is in a league of its own, so is TVS. I think Eicher is the one which offers some technical opportunity, because all of these guys have moved a lot. Even Hero Honda has a lot of catch up. Sorry, Hero Moto, it has done that. So for me, Eicher stands out. The safe one would be a buy on decline on Bajaj Auto, but Eicher looks good.
Fair enough. Right, Maharish, let me just ask you as well, as far as, the defense stocks are concerned, how would you be really looking at those stocks, especially now with this new 2.23 lakh crore rupees of capital acquisition proposals approved? How would you be looking at a fresh momentum here?
Should be. And I think the order books are just burgeoning every passing week, every passing month. And the revenue visibility over the next 8 to 10 years is very, very obvious now. Obviously, it all boils down to how efficiently the execution happens. And one must realize, as an example for the Tejas jets, the delivery timelines will be 8-10 years from now. For delivering a warship, it will be 8-10 years from now. So it's a heavy capex, heavy gestation, long duration project kind of periodicity that they go through. And therefore, earnings velocity is something that will determine the momentum in these stocks. Having said that, I think the best strategy to probably deploy for anybody holding on to these stocks is ride the momentum and keep your stop losses placed at your nearest moving average. The 50-day moving average is what we track at Markets with India. If it gets hit at some point of time, I think so be it. You will still be exiting at a good profit. If not, I think keep on riding the momentum and carrying on that higher end of the range that the markets and the stocks are taking.
Okay. Hemin, any particular top stock from the defense pack which looks very, very positive for you on the charts?
Well, actually, frankly speaking, everything has moved. Very little to go on, but I think BEL is structurally very positive, very systematic. So I think I would go in for BEL, safe and sound. So BEL would be my pick.
Kapadia, this is slightly a rhetorical question. For those who've participated from April till November, or even caught the gravy train midway, they are very happy. And you have the record high on the Nifty today, beginning of December. Now, what about those who haven't, dipped their toes into what is turning out to be a fantastic bull market on Dalal Street? To them, what advice do you give? What should they do? Should they wait for lower levels to come in, or this is such a momentum, 50 point Nifty नीचे जाता है, लोग खरीद लेते हैं? What should they do?
Well, frankly speaking, Mr. Bhatnagar, I would say go the mutual fund route because at this level, it's fraught with danger the way I see it. But on a slightly serious note, yes, I think I've been a technical analyst for about 34 years now. But I don't think it's possible to catch the top or bottom either ways. So I have a feeling that if you like a stock, I think Mayuresh can give more view on that. Uh, I think if you like a stock fundamentally structured, do a SIP sort of a scenario because I mean, time to time we would get dips, some war situation, some election news. So I suggest you do an SIP because going the whole hog at this level, I'm not sure that is the way to go. But you cannot just sit on the sideline like you said. We have a raging bull market going on and doesn't seem to be in a mood to stop. So the way I see it, pick fundamentally sound stocks and do an SIP sort of a scenario where let's say you're buying 1000, you buy 300 now on a dip, buy 300 more, last 400 later, something of that sort. Because either momentum is too good to ignore, and it's been too much to jump in completely, Mr. Bhatta.
Right. Mr. Kapadia, let's take this discussion forward. And this is the sagest of advices laced with wisdom that is coming to you after 34 years in the market. Mr. Kapadia, name two stocks in the blue chip space and name one stock in the mid cap space that is going through a structural uptrend on your long term technical charts. We will buy the dip there.
Okay, that is I would say that is a googly Mr. Bhatnagar or a dusra as people would put it. But yes, that is most welcome. In terms of a structural move, there is something called Thirumalai Chemicals. It hasn't done anything for years. I don't think most of the chemical stocks have done anything spectacular over the last few years. But yeah, on pure technicals, this is on the fourth wave according to the Elliott wave theory. I believe one entire 2.5, 3 year up move is going to unfold. We're at 210. I would say the stock will double in the next 24 to 30 months. So this is something, Thirumalai Chemicals is something which for me stands out in the mid cap scenario where, okay, at this time I would particularly look for stocks which haven't done much. So yeah, in the mainline stocks, I think Reliance Industries, because frankly speaking, getting a good mainline stock at this point in time, which is fresh, I think would be slightly difficult from that point of view. But I guess Reliance Industries is something which would stand out for me. I would also go in for something like an Infosys because IT starting reality would have been a pick sometime back because it's finished a 10-year correction, but everything is shot through the roof. So it would be probably Reliance and Infosys, the way I see it, which look good, have finished corrections. The longer term point of view, the bull market is intact, Mr. Bhatta.
Right, sir. We look at the opening quotes. Nifty is 20,204, ladies and gentlemen, 72 points higher. Record high is just probably a few minutes away. Nifty Bank 44,572, 82 points higher. Another green tick on the IT index and the Nifty 500. The broadest index is the best gainer, 0.5% higher, 18,077, fresh record high. Let's look at what stocks are doing. In terms of gainers in index heavyweights, Reliance 0.3% higher, 2386. HDFC Bank flat at 1557. Infosys 1458, 0.2% higher. TCS, ladies and gentlemen, is the top draw on the index heavyweight space, up 0.5%, 3503. This is the beginning of their buyback. Okay, Tata Motors 0.5% higher, 70890. ICICI Bank is in the red. ICICI Bank and Axis Bank are in the red. Let's look at the FNO space, and I actually first want to see what is Tata Technologies doing. Remember, this was the latest listing, 1305, 0.5% lower, nothing much here. How about IREDA? If we can see what is IREDA doing. then that would be a wonderful thing to check. Okay, 6660, nothing much, 1.7% higher. Let's shift focus to the FNO space minus the index heavyweights. Delta Corp reacting 5.6% higher, 150. Hindustan Aeronautics, defense play 3.6% higher, 2467. Indiabulls Housing Finance 3.5% higher, 211, 212. Hindustan Copper 175.60, 1.5% higher. Top losers, Muthoot Finance 2% lower, 1450. Remember, this is just a profit booking happening. The stock surged yesterday. Trent flat, Wipro flat. There are hardly any sellers across the board. Let's look at NSE 500 and then go to Hemen Bhai immediately. Okay, top gainers. It's Engineers India 3.8% higher, 153.15. We have Prestige Estates 1040, 3.2% higher. We have IRCON 171.15, 3.3% higher. Let's look at all-time highs. The list is phenomenal, Sakshi. It's filled with real estate stocks. Brigade Enterprises from Bangalore, Lodha from Bombay. You have a record high on Sonata Software, 1391. These are the names that I'm taking which we don't normally discuss. SGVN 8610, 1.35% higher. It's a green across the board. Maruti 10,665, and the Nifty, ladies and gentlemen, is at a record high 20,222. Mr. Kapadia and Mayuresh, what a wonderful day to have you both. Mr. Kapadia, your comments first. What to do on Nifty?
If you are in a risk-taking mode, Mr. Bhatnagar, use today's intraday low to go long. Earlier I said don't chase it, but if one needs to trade, if one is compelled to trade, please use today's low as a stop loss. But I would still say I would be safer buying something like maybe a Canfin Homes or something like that. I wouldn't chase the Nifty still.
Okay.
I'm sorry, what stock did you say, sir?
Canfin Homes looks very interesting on the charts. Rounding bottom, consolidation phase, setting the stage for a breakout from here.
Right. Okay, let's talk about cement pack stocks again. Kesoram up 5%, Ultratech 1% up. Hemen, what would you do here? Any particular stock from the cement basket?
Well, frankly speaking, Kesoram has done a bit too much, to be honest. I have a feeling that even something like a Ramco cement, I would look at, because Ultratech has gone through the roof. So I would wait for a cool off, because normally Ultratech leads the entire cement pack. So frankly speaking, that would be a top pick, but no. So I would probably look for something like a Ramco cement, which hasn't done much up till now.
Okay. Another stock I wanted you to look at is Bajaj Auto. The sales figures have come out and we are seeing a 4 lakh unit sales for the month of November. Exports down 6%. Bajaj Auto is reacting to it, slightly lower in trade. What would you do on Bajaj Auto, sir?
Actually, frankly speaking, it looks like the leaning tower of Pisa to me. It's leaning but doesn't want to go down. Having said that, some negative divergence in intraday. Frankly speaking, Sakshi, if the stock moves from 4,600 to 6,400, I don't think intraday is very relevant, because it's a phenomenal, humongous move. So maybe just taking a small breather, but the intraday chart seems to suggest a little bit of trepidation. What I mean to say is some near-term pressure seems to be on the end.
Okay. Mayuresh, your thoughts on Bajaj Auto?
Has been a fabulous move, Sakshi. And very frankly, I think a lot of the issues which had surrounded the stock in the past few quarters, export markets and key markets where volume growth had suffered, how the volume growth for the Indian markets were phasing out as well. And the expectations of new models. I think all these aspects are now coming together. Export markets, the supply chain concerns have been addressed quite significantly, and the demand concerns as well. For our own domestic markets, the expectations of volume growth, both in terms of existing models and the new platforms expected to come through, very well received. A lot of the input costs have moderated to a large extent. And therefore, I think it sounds reasonably placed. Our valuations, as I said, for both Bajaj and TVS, a tad bit higher compared to their long-term averages. Yes, but can there be earnings momentum for these stocks as is concerned over the next few quarters? Absolutely, yes. So I think any investors holding on to this stock may continue.
Okay, let's do a bit of an options kind of a move. I'd like to see the 20,200 call for the Nifty for the current weekly expiry. To my mind, it's trading at 20,200 is at 170, 165. I just want to show this on screen to convince people that we are tracking this one. Remember, it's at about 171. I just want to see what is the most recent high of this one. Okay, this is at the highest point so far. Let's look at other calls that we had tracked, and I distinctly remember looking at Bank of Baroda, the 200 call. Let's look at that price. These were options trade discussed yesterday, and this one's now doing fantastically well, ladies and gentlemen. It's at 7.15 rupees, as also the Canara Bank 400 rupee call, which at the moment is just a moment. I'll just look at this one. These are the 3 or 4 options trades that we had decided on yesterday. It's hit a high of 18 rupees 81 paisa, which is a substantial gain on the price that we had checked. Okay. Nifty shows no signs of abating, 87 points higher, 20,219 in front of me in the cash markets. Let's look at the top gainers and also take a wider detour into the markets. We are at 923 at the moment. Okay, Sakshi, the 19 indices that we track, all 19 are in the green. Nifty Realty Index is the top gainer, 2% higher. This is a fresh record high, 727. The Nifty Energy Index, 1% higher, 29,550. Pharma Index, 0.5% higher, 16,350. PSU Banking Index, 0.7% higher, 5,076. Again, it's the high beta that's moving the market. Bombay Stock Exchange, 2559. L&T, 3184. And Tata Power 272.45. These are some of the stocks which are making waves on the National Stock Exchange. Mr. Kapadia, to you, what should one do about Bombay Stock Exchange? This is something that goes right through the heart. 4 times higher in a span of 7 months. 25.56. There is no let up. I know the smile tells me that you started your life on Bombay Stock Exchange, and it's a fitting tribute to an organization that is so close to our hearts. But what to do?
Well, I used to go to trade on the BSE since I was in college, Mr. Bhatnagar. But frankly speaking, speechless, happy. I am not sure I have any technical reasons or parameters. I think laws of gravity do not apply to the Bombay Stock Exchange at the moment. It's consistently making higher tops and bottoms. Every rise has been retraced by a small time price correction and continued. So it's been a very structural move. Buying fresh, I am not sure, but continues to go up. So I would say hold if you have a position. I am slightly conservative. Once again, I would not know if this is a fresh buy. The momentum is tremendous, no doubt. And if you were to do that, the swing high on 21st November could be a stop loss, or maybe the swing low on 24th November could be a stop loss. But I would be slightly reticent about recommending fresh, but still looks fine on technical parameters.
All right.
Okay, it's very difficult for me to sort of take a, even suggest taking a technical view on BSE given the very sharp rally. Let's leave it. Sometimes, things don't turn out the way that you hope they would. BPCL, Mr. Kapadia, 441. What is your view?
Well, HPCL, BPCL, all of them look good. Well, they've given a perpendicular rise. I still feel that there is more headroom left. I would. It's a toss-up between, frankly speaking, HPCL and BPCL. I would maybe prefer HPCL a bit more, but both high beta, both have done phenomenally well. The rate they are moving, I think for the next 1 week or so, one can take a trade using today's low as a stop loss.
Okay. Mayuresh, let me take your view on Indigo because ATF prices have now been slashed by 4.6%. This is news just coming in, and this is the second reduction in 1 month that we have seen. How would you look at Interglobe Aviation?
It's a momentum call, very frankly, Sakshi. And with ATF prices coming off, obviously, I think the input costs, which accounts for 45% because of ATF, that's a high sensitivity input cost as far as earnings is concerned. And a broad set of expectations is that crude might just stay in this range of 80 to 90, which means that the expectations of volatility in crude prices over the next few months is probably ruled out, which means ATF prices should probably stay the way they are. Again, the best of season to come, quarter three, lot of holidays, Christmas holidays, so on and so forth. You've obviously seen, even during Diwali time, the kind of rates on certain domestic routes which had gone through the roof. And obviously, what they are adding on to the international tie-ups and international routes as well, which are very high margin accretive for aviation companies as well. So I think if ATF prices stay the way they are as per the expectation of where crude is expected to be, more routes expected to be opened up, more planes expected to come in over the next few quarters. I think this is one stock that can purely be a momentum play for medium-term
Okay.
investors.
Okay, a momentum play. One more stock that is reacting to the news flow. I think Bharti Airtel, there's a large trade that has taken place, 1.4% of equity exchanged at 1023, and the stock is at record levels again. What would you look, how would you look at Bharti Airtel, Mayuresh?
Positively. So I think it's like a duopoly as we speak. Yes, Vodafone Idea and BSNL is there, but they've obviously been losing market share consistently over the last few months. Vodafone Idea also has the legacy 2G network, which means the transition and the huge capex will make things a little bit more difficult from a balance sheet construct. Bharti's domestic and the African business has held out very, very well. The kind of spectrum payouts, 5G payouts, the capex required, yes, the leverage portion is significantly higher, but I think it's very, very manageable in terms of cash flows. And the ultimate proof of the pudding is obviously going to be how ARPU increases are going to be. And it's a no-brainer that over the next few months, there will be ARPU increases, not just for Bharti, for Jio as well, which probably means we need to pay higher bills, Sakshi, very, very frankly, as far as data consumption is concerned. And
Sure.
therefore, that's going to be the kicker in terms of earnings going ahead. So, yeah, I think strong, stable stock, strong story continues.
Okay, let's look at two stocks that our analyst friends have recommended. Exide Industries we go first with. Remember, this was Mayuresh's pick as far as the fundamentals are concerned, and it requires a presence on your portfolio. He feels 291. This is one of the best gainers as far as the F&O auto space is concerned, 1.2% higher, and this is headed towards an all-time high of 304 rupees, which was stuck in August of 2018. Coming to you, Mr. Kapadia, first. Your view on Exide technically, what does it say?
Well, frankly speaking, you leave me no choice, Mr. Bhatnagar. If Mayuresh picks a stock, I mean, I have to say yes, the superb analyst. So yes, I will go with what I will toe the line. But on a serious note, yes, I think we finished a 2.5 month correction. Stock looks good, set to resume its uptrend. I believe the 304 all-time high would be crossed. I have a target of probably 320 or so. Looks good. I would say mal lao on a small decline or even.
Okay. Mr. Kapadia, you know, this is not a place for nepotism. You have full discretion and full freedom and independence to trash a call. And now I will put the reverse question to Mayuresh. Mayuresh, Cholamandalam Finance is doing very well. 1123, one of the strongest charts that I have seen. 1280 is the all-time high. The counter is at 1122. What are the 2 or 3 good parts that you see about Chola, which you would like to share with our viewers? Again, full discretion, full independence, zero nepotism.
नहीं एब्सोल्युटली सर जीरो नेपोटिज्म है और इतना रिस्पेक्ट है हेमन भाई के लिए ऑब्वियसली 35 years speaks a lot and his skill of stock picking is fabulous. So I think not saying anything more than that. But Chola, I think it's a fabulous story, Shel sir. I think what you probably need to look at within the finer details
Yes.
of its balance sheet reporting is the kind of pedigree management or the pedigree corporate standing from a parent that it has. So I think that's very, very solid as far as corporate governance ethics is concerned. Secondly, within their own space itself, if you probably look at how the loan book disbursement has been, I think it has been very, very sound. The product mix has been well spread out. The recent RBI circular in terms of the unsecured lending part should not create a huge impact. And because of a strong parentage, the kind of capital advocacy that it has got, even if CET1 ratios, which is a tier 1 ratio, comes down a tad bit, it is still large enough among the larger NBFCs to drive significant amount of advances growth with a very, very stable ALM that they probably maintain as far as balance sheet and NBFC dynamics are concerned. Valuations might be a little bit higher compared to its peers, but quality comes at a price. So yeah, I think this remains one of our stock picks as far as our global focus lists are concerned.
Yes, and quality comes at a price. I'd just like to share one anecdote on Chola investment. Remember, we should always try and buy pain in superb quality stocks that have given multi-bagger returns over the past many decades. Chola falls squarely in that category. You will be surprised and pleasantly shocked to know the low that Chola stuck when the 2020 problem of COVID was with us. It was 131 rupees. From there till now, it has appreciated 9 times in a span of 3 years, and over a period of several decades, this stock has been multi-bagger return. I'll share that number with you, the 10-year CAGR. So if this is something which is available at a substantial discount to its record high, theoretically known as margin of safety, this is indeed a portfolio stock. And Mr. Kapadia, my congratulations to you for marking this one. Let's come back to the market. Bank Nifty at day's high, 44,971. Nifty, 20,230. So now we are concentrating and consolidating above the previous record high. Mr. Kapadia, 930, 934 for you. As terms of the first 15 minutes of trade is with us. Any view that you have set on Nifty, something that we can do, or should we stay away?
Well, I may seem like a broken record, but I still say stay away because once again, there is nothing in, like you said, if we are consolidating above the previous all-time high, I think it augurs well for the market. It is showing relative strength. But one, it's a weekly closing and the day is not yet over. And Monday is when the cat is out of the bag. I'm not a political person, but I don't think a state election would have such a impact on the market. But yes, sentiment-wise, if we are left standing on Monday afternoon or Monday evening at the market closing, I would have more confidence and that yes, the markets are, the setup is everything is fine, but I have more confidence to say that yes, I think we can do something with it.
Okay. Well, thank you so much, sir, Hemant sir, for being with us on this special edition and sharing all your view. Oh, in fact, Mayuresh has to leave. But Mayuresh, I wanted to take one more question before I actually let you go. We have discussed this with you, and this is the PFC and REC stock, and the remarkable rally that we have seen. Again, these stocks are actually topping the chart. So, after you, I'll take Hemant sir's view also on this. How would you really look at this unstoppable rally that we are looking at in both PFC and REC? Record high levels, doubling of wealth, in fact 4 times the wealth. Investors who had invested in this stock perhaps at the beginning of the year are laughing away to the bank. How would you really look at these stocks?
I think the momentum continues, Sakshi, as simple as that. I think the structural story continues as far as the renewable space is concerned. The expectation is 30 lakh crores in terms of investments towards the 500 gigawatt targets over the next 10 years. There's 12 lakh crores in terms of financing these renewable assets as well. So I think a large portion is probably going to come through and the heavy lifting needs to be done. PFC, REC, IREDA. So the structural part of the story continues. Obviously, the exposure for PFC, REC is all government related. So I think the DISCOM dues have come off significantly. Asset quality pressures have come off significantly as well. And the capex spends will continue over the next few quarters and years, structurally leading to better loan growth. And because government dues are coming on time, and the structure is now probably in place with power demand expected to grow exponentially. My own sense is at 1.5 times price to book compared to a lot of other stocks in the market, which are far, far more expensive. There is probably still more juice to go. Top of that, dividend yields of 5-6% becomes very, very attractive for investors as well. So continue riding the momentum and the structural story.
Okay, and Exide, which you had talked about, it's now right now at the day's high level, 293 odd levels can be seen here. So fantastic call for that one. Thank you so much, Mayuresh, for being with us, and always a pleasure having you with us on Business Today and speaking about these wonderful stock ideas that you always share with all our viewers. I mean, sir, first up, I mean, like, you know, it really shows the kind of experience you've had with the stock markets, your strength and your conviction with the way you have stuck with your, call on the Nifty despite the all-time high levels that we are looking at. Your own sense of, PFC and REC stocks, how would you chase the momentum here?
Well, frankly speaking, once again, it's been a perpendicular rise. So I would say on a small decline, the setup is still extremely positive, despite the quantum of the size actually. So I would say on a small dip, I'm not saying a big thing. On a small dip, I think one can go long. And if there are some opportunities where geopolitically or either ways, if there is maybe there's something in the dollar index or crude, if that gives you an opportunity, I think time to time we do get those small dips. I think that's where you can buy into because the setup still seems pretty solid the way I see it.
Okay, let's shift focus to a few options trade, and I'd like the PCR to fire the Canara Bank 400 call for December 28th. Remember, we had discussed this yesterday when Canara Bank was touching 400 rupees, and at that point of time, the price was in the vicinity of somewhere like 11-12 rupees. The counter is now at 413.80, and the 400 rupee call is now in the money and doing fantastically well. Days high 21.51, a very, very sharp move coming into this counter. As also, let's discuss the Bank of Baroda 200 call. Remember, both these stocks move in sync with each other, and at the moment the 200 rupee call on Bank of Baroda for 28th December is again at 8.5 rupees. We had discussed it somewhere like 6.5 rupees yesterday when markets had opened. So these are the two calls that we are tracking, and of course the markets in very, very fine shape at the moment. Mr. Kapadia, coming to you, sectors that reflect pain. As humans, we are generally wired to talk only about the good things that the markets show to us and overlook the bad. Please tell us, where do you see pain extending over long periods of time when it comes to technical charts, sectors or stocks that you can share?
Well, currently we seem to be in a raging bull market, so I don't see any typical pockets where I would see some weakness coming in. The most apparent weakness till now has been in the banks, and that to private sector banks. So I don't see anything particularly which stands out because metals look good, capital goods look good, pharma looks good, auto looks good, IT looks good, cement looks good. So frankly speaking, I'm not sure what. Yes, in terms of underperformance, I think FMCG hasn't done much, but Hindustan Unilever is just showing the first signs of some technical positivity. But if the market is doing well, I mean, FMCG would probably be defensive, so I don't think that would do that well. So as of now, the lag has been in the private sector banks. So I think that's where I wouldn't say that's the pain, but yeah, that's where we are seeing relative weakness up till now. Mr. Bhatta.
Well, thank you so much, Hemant sir.
Let's look at one more stock. Remember,
Okay, fine, Shail. Please go ahead.
Yes, Sakshi, please continue.
Actually, we have to take a break. You can quickly ask that question and then we'll thank him in.
Okay, a very quick one, Mr. Kapadia. Your views on the listing of IREDA and Tata Technologies?
Okay, that is not exactly my cup of tea, but 2004 is when TCS came. That was the last Tata IPO. So the name, the quality, and the insatiable hunger for Tata paper was, I think, very apparent. I still believe that there is some more room left, notwithstanding the school of today. IREVA, we are at 66. Closer to 50, 55, I would say that makes sense from a slightly longer term point of view. But currently, too much of euphoria, too much of froth. Let's wait for sanity to prevail. Let them find their own levels and see stability coming, Mr. Chair, Mr. Patel.
Okay, let's look at Tata Technologies pretty quickly. The stock is now slipping away. Remember, after the remarkable rally on day one, you're looking at profits being taken off the table. So right now there is a 4% downtick that you can see within the first 15-20 minutes of trade. 5% right now down. 1245 currently after the initial enthusiasm on Tata Technologies. So that's something that you need to continue to take, keep an eye out on. Thank you so much, Hemant sir, for being with us and sharing all these stock ideas. Great to have you with us on Business Today TV. What we'll do is we'll quickly take a very, very short break. When we return, we will also focus on the corporate radar section, and J&K Bank's top management will be with us to discuss insights about the business outlook going forward. Many thanks for being with us.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back to Market Today on what has been a fabulous session so far. It's the first day of December, and the Nifty has hit a record high at the moment, 20,270. The high of the day has been 20,240, which is also a lifetime high. We are joined by Mr. Baldev Prakash, Managing Director and Chief Executive Officer at the finest bank in Jammu and Kashmir, the J&K Bank. Mr. Prakash, a very warm welcome to you, sir, on Market Today. Let's begin with the broader understanding of the business and, of course, the macro picture. We've seen a fantastic GDP number coming for the second quarter, 7.6% growth. How do you see the overall corporate demand for loans from your bank as well as in the broader economy, and what are the pockets, what are the sectors that are showing tremendous strength?
As far as Jammu and Kashmir Bank is concerned, I think the retail story of the bank is coming from the core territory of Jammu and Kashmir and Ladakh. So what we have seen this year, the growth in Jammu and Kashmir as far as the retail is concerned is even better than the country's growth. And this is mainly driven by the tourism, the increased tourism, the improved law and order situation, and lot of focus on the investment which is coming in the state of Jammu and Kashmir. As far as the overall corporate story of the bank is concerned, the big corporates are coming from the rest of the country book, which is basically the high rated government corporations as well as the high rated private sector companies. So that story is intact from the last 1 year, and this year it is being supported by a very healthy growth in our core territory of Jammu and Kashmir and Ladakh, particularly in the retail segment.
Very good morning to you, Mr. Prakash. Thank you for taking the time out for this discussion. First up, I'd like you to, help all our viewers get the clarity. We yesterday saw a dip on the stock, and that was mainly due to some confusion that the ED raids have happened with respect to 250 odd crore rupees fraudulent loan at the offices. But that is with respect to J&K State Cooperative Bank and not your bank. Is that right?
Correct, Sakshi. I think that was a confusion created by a few reports, and this was relating to a report which is pertains to Jammu and Kashmir State Cooperative Bank, not relating to Jammu and Kashmir Bank as such. We have clarified it. We have clarified it later on to the stock exchanges also.
Okay. Sir, also help us really understand what is the demand outlook that you're looking at, both from the corporate side as well as from the retail side, in the current regime as far as your state is concerned, and what's the outlook going forward there, sir?
Yeah. Sakshi, the one thing which we are observing this year is a retail demand coming in the state of Jammu and Kashmir, which is basically driven by the housing. We are growing more than 20% in housing loan as far as Jammu and Kashmir is concerned, and now housing loan we are spreading pan-India. As far as the other areas are concerned, basically three areas are driving the growth as far as the retail is concerned in Jammu and Kashmir, Jammu and Kashmir and Ladakh area. One is the retail housing. The other is the tourism related activities. Tourism has seen a phenomenal growth after so many years. And this year, the tourism, the government estimate is more than 2.2 crores of tourists will visit Jammu and Kashmir. And I'm sure the way we have seen the trend, this number will be achieved, rather surpassed. The other thing is the industry which is coming up, particularly in and around Jammu sector. So that is the focus under the investment policy of the government, and the growth is coming. It has started coming in the industry sector also. And the most important is the horticulture sector, that is agriculture and horticulture sector. There is a now renewed demand of the high density apple, high density walnut. We as a bank are supporting this initiative in a big manner. One, by providing the easy cash credit loan, easy Kisan cash credit loans to the farmers who are interested in planting the high density apples. When I'm saying high density apples, the yield minimum 3 to 4 times. And then we should have the proper storage and logistics approach for the farmers once the yield is increased. So for that, the bank is already taking a lot of steps, rather already started financing to the CA stores, which are a sort of specialized cold storage facility. And these facilities provide basically the farmers a facility of just keep the fruit in a sleeping mode, and after 6, 7, 8 months, when the price are right, they can take it and sell it. So these are the few areas I think which are supporting the economy in a big manner. And I'm happy to tell you, Sakshi, next year, first half 2024, we will be seeing the rail connectivity with the rest of the valley also. As of now, we are up to the Katra or Udhampur area. Now, the next half year, the rail connectivity will be happening with the valley. And with that, the farmers will be getting a better connectivity with the rest of the market, and which will improve the earnings of farmer.
Right. So let's focus on excuse me, let's focus on your financials. Jammu and Kashmir Bank, because it addresses such a large state, is predominantly the major banking entity of J&K. Your NIMs 3.77% for March 23, the financial year that's ended a couple of months ago, stand at about 3.77%, sir. Would you like to give a forecast on where NIMs are headed given the fact that there is a possibility of interest rates being cut over the next quarter or 2 quarters, sir?
Yeah. So our NIM stands at 4.07% in the last quarter, which we have reported. And though our guidance has been between 3.75 to 3.90, but we are continuously making it around 3.9 to 4 point something. So in the range of 4%. So we are quite confident that the type of business and the type of business trajectory and demand which we are seeing, we should be able to maintain the NIM within the given range which we have already guided for. I'm very confident about that.
Okay. And sir, would you like to comment on your CASA ratio? How has that grown? We have a lot of evidence to believe that large chunks of money is moving from time deposits towards the stock market via mutual funds or via direct investments. How has your CASA growth been, and are you facing any difficulties in maintaining that time deposit growth?
As of now, we don't face much of a challenge in CASA, though some cost of deposits have seen some uptick because of the competitive rate of interest, particularly in the term deposits. And our CASA ratio has been on a consistent basis more than 50%. And this time also we are maintaining it more than 50%. And as far as the money going from term deposit to stock market, though on a small scale it may be happening, but not from a concern point of view from the bank. And yes, the trend which we have seen is money is diverted from the saving bank to the term deposit, because the term deposit rates are now a little higher as compared to the past few years.
Okay. Mr. Prakash, very recently, I think about 7-8 days ago, we did hear from the RBI and the instruction to banks and NBFCs to increase the risk weight to consumer loans. How have you assessed the impact of that on your own bank as well? What is the portion of unsecured loans that is present in your books, and what would be the impact on cost of funds, your borrowings, and how would that also impact your CAR, sir?
Yeah. So, Sakshi, I think two things we have to address. One is the personal loan segment and other is the NBFC, because the risk weights have been increased on both these segments. As far as personal loan is concerned, we have done all the calculations internally. Personal loan segment for our bank is basically the personal loans to the permanent government employees of the Jammu and Kashmir governments and Ladakh government. So these are against the salaries which are coming to the bank, and the installment on a monthly basis is deducted from the salary, and the rest of the amount is made available to the customers. So and this product for us is more than 15-year old, and we don't see any delinquencies in this product, less than 0.5% delinquencies in this product. So yes, the risk weight has been increased, but from the concern point of view of the slippages, we don't have any concern from that point of view. Yes, coming to the NBFCs, though we have been financing to the top-rated NBFCs, the AAA and the AA and the A portfolio is more than 85% of the total portfolio of the bank. So from NBFC point of view, yes, some impact will be there on the growth, maybe 1 percentage point, but overall, the quality of advance for the Jammu and Kashmir Bank is intact, both for NBFC as well as the personal loan segments. Internal calculations we have done is around 50 to 60 basis point on the overall CRAR of the bank on 31st March.
Okay. Mr. Prakash, could you give us a sense of what your expansion plans are with related to any new business lines that you would like to be adding, and any new branches that you may be looking to add over the next 18 to 24 months?
So, Sakshi, one will be the expansion in Jammu and Kashmir and Ladakh, which will be driven by two factors. One, the strategic expansion where the new localities are coming up, we will be taking the first more advantage there at. And the other thing will be, of course, to support the financial inclusion initiative of the government, which being a leading bank of the territory, we will be definitely supporting that initiative. And as far as rest of India is concerned, we have a plan of between 15 to 20 branches opening. For that, the already the steps have been taken, and by end of this financial year these branches will be up and running. So as far as the business is concerned, rest of India, last year or last 2 years we have seen the growth in mainly corporate segment as far as the rest of country is concerned. But this year going forward, we will be supporting this growth with the home loan. For that, the already a lot of groundwork has already been done.
Right. Mr. Prakash, let's focus on fundraising plans. The reason why I ask this is that credit growth is very strong, but bank balance sheets are very, very well capitalized at this point of time, whether it's the private sector space or definitely the public sector space. You are swimming in liquidity. At this point of time, what are your fund requirements for further loans, and what are the plans to raise fresh funds, if any, apart from CASA?
Yeah. So, are you talking about the capital raising plans?
Yes, sir.
Okay. So, we have got the approval from the board for raising 750 crores in the equity, that is Tier 1 capital, and 1000 crores for Tier 2 capital, which is already on record now. So as far as the Tier 1 is concerned, we have already initiated the process, and for that various activities are going on. We are confident to complete it as soon as possible. And Tier 2 is, I think this year, given the healthy internal accruals the bank is having, so we may not need raising of Tier 2 capital, but maybe next year or so we will again work on it, and if in case required, we will do it. And I'm confident that given the trajectory, the phenomenal trajectory the bank has seen in various areas, business as well as the assets quality or the compliance, we are very sure that there will be a good demand for becoming the part of this growth story.
Right. All right, Mr. Prakash, thank you so much for speaking to us and sharing all these insights about the business outlook going forward. And we will have you back again on the show to discuss more insights towards whenever the quarterly earnings come out as well. Good to have you with us. And let's get back to the markets. Record high levels. Clearly, it's a green screen. What more to ask? Santa has really come in early this December. 20,256 currently on your screens, ladies and gentlemen. 122 points higher on the Nifty, 0.6% higher in trade. The Nifty Bank clearly 1% up, almost 44,881 on the Nifty Bank as well. All the sectors that we track on the Nifty, they're all buzzing in action, barring slight losses on the IT index, but rest of the sectors are all up. PSU Bank topping the charts, 2.2% higher. Realty stocks almost 1.5% up. The Nifty Bank up 1%. Private banks, small caps, mid caps are again tracking those record high levels, and a lot of stocks buzzing in action. NTPC, L&T, ITC, IndusInd Bank, Grasim and State Bank of India, Axis Bank among the top movers in trade. From the F&O action, it is PFC and REC that are topping the charts as well. All right, Shail, you had to mark the options call on the Nifty.
Sakshi, if you recollect, right at the beginning of the show, we had identified 20,200 call for December 7th expiry, and that's doing phenomenally well. It was at about 153 at that point of time, right at the initial point of the transaction when the market started, and it is now somewhere like 204 rupees. So the momentum is fairly strong on the long side. Although this is a word of caution, remember all possible good news seems to have been baked into the price. The market is at a record high. We are headed towards a weekend which is full of news that might impact positively or adversely on Monday morning. With that, in mind. Please be very, very cautious on fresh longs that you take, and it's always good to book partial profit and move the booked profit into your bank. With that, Sakshi and I and our PSCR team will take a leave from you, but stay glued to BTTV for all your news updates on financial market. Have a nice day.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.